Welcome to the Bitcoin Macro War Room, where we jack into the market mainframe and derug the narrative. Plug into the pipes, M2, DXY, inflation, momentum, fresh prints, CPI, ISM, payrolls, rates, truth by facts, not vibes. Tweets and news rundown, meme to policy, curated, timestamped, tradable.
Welcome, you've got mail.
Copium not included. Roll the tape, let's invest like it's 1999, but with better charts.
Whew, I'm ready to go. I hope you are. Happy Friday. Not a happy Friday for the markets, but at least people are starting to put up their Christmas decorations. I got my Starbucks here ready to go for another Bitcoin Macro War Room. Thank you for joining me, first and foremost. We're going to get into all of it, all of the data. I have some spicy tweets as well to look at towards the end, and a brand new website with a wealth of information and some amazing charts that I'm super excited to show you. So let's get into it without further ado. We're going to start, as we always do, with the main chart. It might be Christmas outside, but we're definitely not seeing a Santa rally, and that is for sure given the price. Some good news, though, to glean here is the macro regime tracker has bounced off the 50 line, which is super important, and is slowly making its way back up into this channel. We'll see if that actually does happen over the coming weeks. But again, the ISM print from last week and some of the strength in the dollar has really pushed this down recently. And we've had some terrible price performance. I know I mentioned last episode, or maybe 2 episodes ago, that 98K was kind of the line in the sand, and we have broken through that. And as of this morning, traded down all the way to 94,500. So things are looking rough out there, but there is some good news, and there are some bullish catalysts on the horizon. Last thing to note on this chart before we move on is just that global liquidity is still in this chop zone, but we did bounce off the line and are sort of trending higher, which is a positive to see. In terms of the short term, nothing really changed here. We are still in a negative downtrend, and that is clear. The bands are red. The DMARC indicator here has been working wonderfully, so I'm super happy with that. And shout out to Gabriel on X for that one. Regardless, though, let's take a look at the data with the sort of main charts out of the way. And lo and behold, there was no data this week. So the government did reopen, but there was no data this week at all. Nothing that came out. So not much to see there. Obviously, I think for next week, the main thing that I'm looking at is the Empire State Manufacturing Index, the Philly Fed, and then we'll see some manufacturing, and flash services PMI numbers, hopefully on Friday in the morning. So we'll go over all of those next week. I think the more important thing to note here as we look at the Fedwatch CME tool is that over the last 2 episodes, this has been trending down pretty significantly. I think 2 weeks ago is at 70% that they were going to cut after that hawkish FOMC where Powell said that December cuts are not on the table. Last week, this was 60%. And now it's 53. I think last night it was actually 50%, so it's edged back up slightly, but not what you want to see. I mean, if the Fed does not cut in December, that would be a market nuke, in my opinion, because we've been pricing in these rate cuts for quite a while. So not good. I think they'll hopefully make the right decision. They need to cut. They're way behind. But regardless, we'll see what kind of happens with this as we get closer to December here with a couple of weeks left in November. And we'll take a look at my notes really quick because I didn't write anything new. I just wanted to reiterate something here. And this is what I mentioned 5 weeks ago. I still have these same notes that I think Q4 might actually surprise people, yada, yada, yada. I've read this already a bunch of times and it has played out, unfortunately, for our bags anyway. I did mention last week that I sold all my leverage call positions and I took a bunch of spot off of my actively managed portfolio as well. And that has worked out. So my main priority and main goal right now is to figure out when to get back in, right? My overall thesis has not changed. I think 2026 is going to be a very good year for crypto, but we might have to suffer through some pain first before we get to the other side of that. I mentioned these liquidity positives last week, so I won't rehash them again, but basically starting in December, we should begin to see positive liquidity injections, which I think will be good. So my entire focus is now figuring out where are we going to stop the pain and where I can get back in to the market. I'll cover some more of that next week, but let's take a quick look what you might be here for, the system, because there are some updates here that I did want to share. So it's at 60%, which is not great. It's still at neutral technically. I did add another indicator here from the paid macro research that I use, and it's basically a 3-month outlook specifically for Bitcoin in terms of the macro. So the 3-month outlook right now is bearish. Added that to the score. Again, we are at 60%. None of these other ones really changed this time around. If either one of these top two go bearish, that's going to be really bad. That's probably 3 to 6 months of pain, of bear market type conditions, but that is not currently the case. Overall, still bullish on sort of the main long-term macro indicators. So that's a positive. Again, we'll continue to update this as the weeks go by. For the actual inputs, nothing has changed here. You can see the strength in the dollar, which has sort of rallied off of the lows, but this indicator is still technically bullish. Bull bear market indicator, still bearish. We are well under the STH again, so this is bearish as well. And then for the cycle drift, we are actually under the 365-day MA. So something I pointed out last week, but not something you want to see. Bulls really need to reclaim that. As far as crypto quants is concerned, there wasn't too much here. I know I've been sharing this chart. We are now even lower in terms of the heat macro phase indicator. And as I mentioned, this could stay down here for a month or a month and a half or even 2 months. So don't be surprised for continued underperformance. Outside of this one, the last thing that I really wanted to mention here, which is something that I'm looking to see flip, is long-term holder versus short-term holder. So you can see short-term holders have been buying like crazy, trying to time the bottom, while long-term holders have been dumping even more. You really want to see the reverse here before we can really say that smart money is quote unquote buying. So I'm keeping an eye on this, but it does not look great at the moment. And that's just unequivocally the case. Retail investor volume still kind of in the trash here. OTC, nothing to glean here. USD market cap change has fallen off a cliff. So that's also something important to note. If this does go negative, that would be a good indication that we have like fully capitulated. But regardless, we'll keep an eye on that. In terms of the liquidation maps, let's take a look at the 2-week one really quick. A lot of the liquidations for the 2-week have been taken out. Let's take a look at the 1 year and zoom as far out as we can, because we looked at this last week and there was a cluster of liquidations, down to 93 and then pretty much up until 74K. I don't think we'll get anywhere near those lows, but at this point, you would assume this 92 to 93 might get hit given the price action this week. Regardless, we'll keep an eye on that. I did want to share this website, which I'm going to start using a little bit more. They have an amazing amount of charts. Nice. I'm not going to go through any of them today, but I did want to share this in case you want to check it out yourself. It's called Chart Inspect. Definitely look through these. If you're looking to make your own system, this would be an amazing starting point. You have a wealth of information here. You can kind of throw some of these together onto a Google spreadsheet, score them up, and boom, you have a really lightweight, sort of beginner-friendly system. We'll go through some of these in the upcoming weeks because I think a lot of them are actually very useful and very interesting in terms of sort of the data that they display. So really hyped about this. They also have some macro inputs and as well in terms of economic growth, labor market, inflation, monetary policy. So really, really good. Definitely check it out whenever you have the chance. But let's move into some of the tweets here for this week. And I did mention this last week from Julius in terms of his model, which I really like. He has now also capitulated, said Bitcoin could still drop a bit lower in the short term. Many on-chain metrics aren't signaling a bottom yet, and liquidations don't look great either. I do agree with this viewpoint. Still, my outlook for the next few months remain bullish. I also agree with this. So I'm trying to figure out when to get back in. You can see here, as I mentioned last week, 80K is sort of the bottom of this band. And we have been there before in terms of the bottom of the band. Not often. This was back in 2023. I would love to see a sort of long term of this. But regardless, this is a great buying zone, in my opinion. Uh, I wanted to share these because I hate these kind of charts. Just taking some arbitrary line and saying that this is it, it has to bounce because it's bounced 4 times before from here, it doesn't mean anything. It's nice to look at, it's fun, but you really can't be making investment decisions based on stuff like this. Has it worked previously? Yes, but this is also a very zoomed out chart. As you can see, this is the last 2 cycles, and this is going to decay over time. So don't put too much stock into this kind of stuff. It is, again, nice to look at, but if I were to pull up the AVIV ratio Z-score, I'm assuming that we're currently at 0 or maybe even in the negative. So regardless, moving on here. Again, this is something I use. I do use the global liquidity as sort of a composite, something to look at as part of the system in terms of where M2 is going. But this correlation is dead. Throw it in the trash. It's dead. This gap might not close ever. You know, I will share at some point, if you really, really zoom out, the global M2 chart and Bitcoin, while they're correlated generally in a directional basis or rate of change basis, they're not going to move in lockstep. So throw that in the trash. Forget about it. It is what it is at this point. From APSK here, this was a great post and something that makes you think, man, this cycle really has been different. The 4-year Q4 euphoria never came. Maybe it's just delayed. Many voices on X right now assume a stellar 2026. I'm a little more concerned. Sentiment isn't great right now and stocks are at all-time highs. If equities turn negative, I'm just going to hope that the power curve holds. My focus is now making sure my cash flow is solid so I can continue buying through a bear market if it comes. And you can see this sort of cloud is kind of the historical average. You can see the 4-year cycles min max and the mean. So this cycle, we kind of front ran a lot of the price and are now sort of chopping. There is still a possibility that we get a euphoric blow off top, but the only time that's going to happen is in 2026 when they need to roll over the debt, refinance, inject liquidity. It's not going to happen right now. You know, unfortunately, we're in this weird air pocket where we're going to have to wade through some more pain, in my opinion, until we can see the sort of staircase to Valhalla on the other side. So regardless, this model also kind of looks broken. I mean, this cycle is different. And I think just aligning it to previous cycles, there's only been, 4? It doesn't make a whole lot of sense. We're in a new paradigm with the ETFs, with the banks, etc. So it's going to be a mature market. Regardless, Noodles here with a post. The market will never return to the euphoria peaks of 2013, 2017, or even May 2021 because its structure has fundamentally changed. So something I just noted. The current Newport highs now represent the new euphoria level, the same dynamic that was already visible at all-time highs in November 2021. Today, collective psychology is expressed more through derivatives and ETFs rather than on-chain movements. And this is 100% true. It's why I've stopped relying as much on stuff like the Newport or the MVRV ratio Z-score. While I think it's still important, yes, but the alpha is decaying and this is a different game.
Bye, have a great time.
Before, you had to buy BTC from Coinbase or whatever exchange and the movement had to happen on chain. With having call options now and derivatives and ETFs, a lot of the movement, the on-chain movement, is sort of lost. So those metrics aren't as powerful as they were. So charts like this are really not going to help you long-term. It's a new game. You have to find a new edge. Alpha extract here. Liquidity flow has decreased since early September. No surprise, Bitcoin printed a false all-time high breakout. PBOC liquidity has remained positive. The bigger driver for risk assets, U.S. liquidity, has been tight, and that continues to be tight, I think, until they start turning on some of the spigots here towards the end of Q4 and the end of this year. So regardless, you can see via this model, it looks like 85K is in play. So just be careful out there. Don't ape in right away. If you're sitting on a mountain of cash, take your time, DCA in. Don't just buy with the entire bag and hope that we V-reverse from here, because that could not be the case. And so you do want to have some powder if you do need to average down. But that is my whole goal for this next week to 3 weeks, is to figure out where I want to deploy and when I want to deploy my capital in terms of the price. So come back next week for more. I hope you have a great weekend. If you made it with me this far, as always, thank you so much for watching. I really, really do appreciate it. If you did like the video, you know what to do. I'm not even going to ask you for it. It would help my tiny channel a ton. Appreciate you out there, and have a great weekend. I will see you next week. Cheers.